Welcome to Smart Stock Watch. Today is September 4th, 2025, and we're diving into ChargePoint's second quarter fiscal year 2026 earnings report. ChargePoint, a leader in electric vehicle charging solutions, has just released their latest financial results. Joining us today is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. ChargePoint's latest report provides some interesting insights into their financial performance and strategic initiatives, and I'm excited to discuss them.
Revenue and profitability overview. Let's start with the top line. ChargePoint reported a revenue of $98.6 million for the second quarter, which is a 9% decrease from the same quarter last year. However, their gross margins have improved. John, can you elaborate on this?
Absolutely. While the revenue saw a decline, ChargePoint's focus on operational excellence has led to a significant improvement in their gross margins. The GAAP gross margin increased to 31%, and the non-GAAP gross margin rose to 33%. This improvement is largely driven by the growth in subscription revenue, which increased by 10% year over year, contributing to better overall profitability.
Operational efficiencies and strategic initiatives. ChargePoint has also made strides in operational efficiencies and strategic partnerships. Their operating expenses have seen some changes. Can you tell us more about this, John?
Sure. ChargePoint's GAAP operating expenses were $89.7 million, a slight increase from last year. However, on a non-GAAP basis, operating expenses decreased by 12% to $58.6 million. This reflects their efforts in cost management. Additionally, their partnership with Eaton has led to the development of a new modular express DC fast charging architecture, which is expected to reduce costs and improve efficiency. They've also introduced Safeguard Care, an on-site inspection service to enhance customer experience.
Financial health and liquidity. Let's talk about ChargePoint's financial health. They reported a net loss, but there are some positive aspects regarding their liquidity. What are your thoughts, John?
ChargePoint reported a GAAP net loss of $66.2 million, which is a slight improvement from last year. On a non-GAAP basis, their pre-tax net loss was $31.9 million, down 26% from the previous year. Importantly, they have a strong liquidity position with $194.5 million in cash and cash equivalents, and their $150 million revolving credit facility remains undrawn. This provides them with a solid financial cushion to support future growth initiatives.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 201 cents for ChargePoint, but the actual EPS came in at 285s. What does this mean for the company, John?
This EPS miss of 0.84 cents indicates that ChargePoint's financial performance was below analyst expectations. While the company is making progress in operational efficiencies and strategic partnerships, the EPS miss suggests that there are still challenges to overcome, particularly in terms of revenue growth and cost management.
Future outlook and guidance. Looking ahead, ChargePoint has provided guidance for the next quarter. What can we expect, and what are the key areas of focus for the company?
ChargePoint has guided for revenue between $90 million and $100 million for the third quarter. They are focusing on new product launches, such as the Express DC fast charging architecture, which could drive future growth. Additionally, they are looking to expand their market presence in Europe, which presents a significant opportunity for growth given the increasing adoption of electric vehicles in the region.
Key takeaways. In summary, ChargePoint's second quarter results show a mixed performance with improvements in gross margins and strategic initiatives, but challenges remain in meeting EPS expectations. Their strong cash position and new product launches provide a positive outlook. Thank you for joining us, John.
Thank you for having me. ChargePoint is certainly a company to watch as they continue to innovate and expand in the EV charging space.
Thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more insights. We'd love to hear your thoughts on ChargePoint's performance in the comments below.